We are back with our featured guest, John O'Connell, who always, of course, watches the markets, believes may not be the right time for investors to add meaningfully to their stock market exposure. The big run-ups we've seen so far this year make you cautious?
You know, we had a big year last year. We were up
did.
30% last year. We're up 35% this year. You know, 65% returns. While it feels great, I think you have to start saying, you know, we're not the only ones that know that there's good companies out there.
Right.
You know, and it's the best time to buy stocks is not when things are rosy. The best time to buy stocks is when things are bleak and bad, and people are pessimistic. Investor sentiment is very, very high. It's flashing real warning signs. You're seeing all kinds of speculation in different in individual stocks in the States. You've got a Federal Reserve Board that's lowering interest rates, and there's discord about whether that's a good idea or a bad idea. We're lowering interest rates in Canada because the Canadian consumer is broke, and the Canadian dollar is falling. It makes importing goods very expensive to Canada. It's potentially inflationary. You've got a new administration coming into the States, which is really buoyed investor confidence, so that's a positive. The U.S. consumer's in good shape. U.S. consumer spending. You can expect good economic activity out of the States. So everyone's buying stocks. Everyone's happy. There's lots of jubilance, and you run the risk of over-priming the pump. And so I'm not negative on the economy. I'm not negative on the stock market longer term. I just think you have to burn off some exuberance. Investors have been putting a lot of money to work. Cash levels are getting very, very low. Cash is trash, but nonetheless, you can make 4.5% in overnight money in the States these days. It's pretty attractive. It seems to me that now's not a bad time to be reassessing things and see what may come with this new administration in the States. You're getting some economic data, which is coming out in pretty strong in the States. And ever since the Federal Reserve Board started lowering interest rates, 10-year Treasury rates have gone up. So, you're going to get to a point where if you start seeing inflationary bubbles heating up again in the States and 10-year Treasury rates start to go towards 4 3/4, and we're at 4.43 or something this morning. So it's not that far. You could start seeing investors start reassessing how much money they want to have really allocated to stocks. And in Canada, foreign investors have left. You see a stock like BCE yielding over 12% now, I believe. People are really, the Canadian...
That's the yield on BCE.
The yield on BCE is 12%. So, you have to sort of wonder at what point does the board of directors of BCE begin to consider whether their strategy that they're pursuing is all that correct. You can make fun of governments, but, people are making fun of BCE right now. And so I just think that there are lots of things that could go wrong here, and particularly when so many people are optimistic and putting money into the market, and sometimes pretty carefree fashion. There's always something that comes around. The tech wreck in 1999, people were, the same kind of exuberance when you see a company, people are just buying Tesla stock because he knows Elon Musk, or he knows Donald Trump, and you've got Bitcoin going to big numbers. There's a lot of speculation taking place, and it's just, usually it leads to tears. There's a lot of partying going on.